Howard. I want to give him the proper introduction. He works in IT as an IT architect at a law firm. And he became interested in Bitcoin about 3 years ago. He's got degrees in both finance and psychology. So Bitcoin and the incentive structure is exactly what he's interested in. He's really interested in seeing how this field develops over the next months, weeks, years. And he is the person who has instigated our Halvening party, which we posted today, but we'll give you more details later. He's going to be talking about the Halvening and what that means for Bitcoin. So thank you. Come on up. You are welcome. Here, do you want to put this up here? Okay.
Okay. As Pamela mentioned, I've been interested in Bitcoin maybe 2.5, 3 years now. It's fascinating, all aspects of it, but the technical, political, economic, but also it is just a drama machine. It's a blockchain of drama. There's always something going on. It's always fun to watch what's going on in the Bitcoin space. And now, in the past couple of weeks, we've seen that Ethereum and the DAO has had their own drama. So it's not only Bitcoin that's the drama king in the cryptocurrency space. So lots of interesting stuff going on. What I'd like to talk about is the Halvening. So what exactly is the Halvening? The Halvening party Pamela was talking about. The Halvening is, first of all, it's a mashup. And actually, you're going to have to forgive me. I'm going to actually try to move my presentation along with my watch. I know it's totally geeky. Probably the geekiest thing I've ever done. The Halvening is a mashup, and of course it's not working, so I'm going to do it manually. A mashup between the Bitcoin halving event and The Happening, the disastrous 2008 film with Mark Wahlberg and Zooey Deschanel, where they're running across the country to escape attacking trees, or something of that effect. Has anybody seen this movie?
Yes.
Yes, unfortunately. I watched this movie the other day as research for this talk. I do not recommend it. So, before we get back to the Halvening, let's talk a little bit about Bitcoin mining. Most of you probably know a little bit about Bitcoin mining. Bitcoin mining is the incentive structure put into place for the people who take care of the bookkeeping on the Bitcoin network and the security on the Bitcoin network. How they're paid is through Bitcoin block rewards for finding blocks for each block that occurs in a 10-minute interval, which is basically all the transactions that have happened in the last 10 minutes. And the Bitcoin miners are rewarded with, starting with the Genesis block, block 0, they're rewarded with 50 Bitcoin for their services to keep the network secure and functioning. Now, what's interesting is that it wasn't always supposed to be 50 Bitcoin. The initial algorithm specifies that every 210,000 blocks, the reward is going to go in half. It's going to be cut exactly in half. So 210,000 blocks. A block is supposed to be targeted to be about 10 minutes in human time. So 210,000 times 10 minutes is 2.1 million minutes, which works out to about 3.995 years. So every 4 years, the block reward halves. So the first block, block 0, was mined by Satoshi Nakamoto, whoever he, she, they, or it may be, on January 3rd of 2009, as I showed before. So you're probably, and this is the block 210,000, the first halvening event. 4 years later was on November, I don't know if you can barely read that there, November 28th, 2012. So now you might be wondering to yourself, well, you said it was 4 years. 4 years from the Genesis block of January 3rd, 2009. It is approximately January 3rd, 2013. So why is block 210,000 occurring in November 28, 2012, which is a month and some change before when you would expect it to happen? Well, the Bitcoin protocol accounts for additional hash power joining the network, but it's not a dynamic accounting. It happens every approximately 2 weeks or every 2016 blocks. So what happens is, if additional computers or CPUs are added to the network, or the efficiency of those CPUs goes up, then the block time in that 2-week interval can reduce from 10 minutes targeted time to a lower time. So you get faster block generation. This is the hash rate over time of since the beginning. Again, you can barely read that, January 2009 up until current day. And so what happened over the first halving interval to late 2012, you can't see it on this because the gains lately have been so much higher, but there were some gains here as well, which are just barely even noticeable. So the fact that you have hash power increasing constantly means that the block time is compressed, and therefore the 4-year interval of 210,000 blocks is compressed as well. It's kind of accordions inward. So we pulled that forward into November of 2012. And then the second halving period, of which we're coming to the end of right now, started about here. And this was going from CPU mining to GPU mining to FPGA mining. And they were just starting to do some research on ASICs there. So all that activity brought that forward to November. Now the second halving period here is where ASICs really took off, and you can see that ramp up right here with the ASICs. That flattened out a little bit, and then you have this huge ramp at the end, and that started at the end of 2015, beginning of 2016. And that's mostly from, I believe, the processes that went down to, they're getting down to 16 or 14 nanometer processes. So we're getting faster, more efficient chips, higher density chips in the processes, and so this will probably flatten out above here. But all of this activity, constantly adding, scaling out by adding additional processors, and scaling up by making them more efficient and faster, means that we have pulled forward the next halving day from what we would think would be late November of 2016, which would be 4 years from 2012, all the way back into July. And that's why, well, this is the difficulty, by the way. This is the difficulty that adjusts in 2-week intervals. And by the way, this is a graph you want to see for Bitcoin Network because most of it is up. There are hardly any places where the difficulty reduces. That's when the hash power is being removed from the network. People are taking their miners off the network. Then the difficulty will go down. But we see it consistently going up, which is a sign of a growing network. If we started to see the difficulty go down, that would mean hash power is being removed from the network, block times get longer, and things extend out. So it is important, a dynamic accordion effect. This is from bitcoinblockhalf.com, I believe that's the website. This is the current estimate of when it's going to happen, and it's estimated to happen almost exactly 2 weeks from today. Again, this is dynamic. As we get closer to it, we'll know exactly when it'll happen, but this is moving day by day, hour by hour. It was earlier in the week, it was later that day. A few days ago, I think it was starting to get back into July 9th, and now it's pushing back into July 10th as hash power is being added and removed to the network dynamically. So this is sort of narrowing down, and once we get closer to the actual day, then we'll know exactly when it's going to happen. Which makes it difficult to plan a party for. Before we decided that the Tuesday event would be better, like a post-halving event, which we'll talk about later. Pamela will talk about that a little later. I'm trying to think, is there a way we can have a party so we can actually, be there when it halves, and we can watch the block and see it change from 25 to 12.5 Bitcoin. I know it's totally geeky, but I love it. And it's just too difficult. We don't know, when it's going to happen. I was telling the story earlier. I was talking to this event space, asking their rates, and they were asking, well, what's this party for? And I was like, it's sort of an event, but we don't know when it's going to happen, so it may be earlier in the day, so we may have to, plan it earlier, or we may have to have it later. And the guy was like, oh, okay, no problem, that's fine. I'm like, oh, he's taking this pretty well. right? Until I realized he probably thought I was talking about a pregnancy, like someone having a baby, which is sort of kind of what's going on here. But it makes it difficult to plan exactly when we can have a party for this. So I think we'll be settled with a post-Halvening festivity, which we'll talk about later. This is the actual source code in the Bitcoin software that regulates the halvings. You can see it here. Amount, subsidy, 50 times coin, and then it takes into account how many halvenings there are. There was a question earlier. If halvings greater than or equal to 64, return 0. So there's only going to be 64 halvening parties. So this is a rare treat, which is why I'm excited about it. It's second quadrennial. It only happens every 4 years. It's like a national election. And I think it's an exciting thing. But anyway, this is the secret sauce, the secret formula that makes Bitcoin Bitcoin. Because the halvings are what make Bitcoin a deflationary store of value, right? Makes it sort of a collectible, kind of like a digital version of gold. But this version of gold has an exact issuance policy and an exact total end amount, which is even better than the real gold, which we don't know how much is stored in the earth until it's valuable enough for us to try to dig it all out. And there might be some on asteroids, that we don't know of. That could be a whole asteroid made up of gold, would just ruin the gold market if they could mine it. So in these few lines is encoded sort of, it's less computer code and more of a political statement and a psychological hook to get people of a certain economic, political mindset interested in this asset. Because that turns it into a deflationary store of value, unlike fiat currencies such as the US dollar, which slowly inflate away their value over time. This is the last 100 years. And this is through normal, healthy inflation. It's taking away the value of your money over a century. Then you have the other side of it, which is the current Venezuelan bolivar experiencing hyperinflation. And the Zimbabwean dollar was having hyperinflation the past, several times in the past decade or two, I believe. And you get to the point where it's the complete opposite of a deflationary asset, where you get things like this. Please do not use our central bank currency to wipe your ass. That's what they're telling you to do in the bathroom. That's the point where currency is worth less than almost everything else on earth. So again, we go back to this. You can see that these are the halving intervals. You can see that this chart is actually based on the 4-year interval, so it doesn't take into account the compression, the hash power added to the network. And you see that here's the inflation of the Bitcoin money supply over time. Well, wait a minute. You damn dirty liar. You just said it was a deflationary store of value, but this is inflationary. What does that mean? Well, what that means is that it's inflationary in that the money supply is automatically increased based on this algorithm. It doesn't mean it's increased based on population growth, increased based on the whims of a central banker, increased based on something else happening in the economy. It's not under human control. So it's not a whimsical sort of inflation, it's a predictable sort of inflation. And if it outpaces population growth and adoption, it is deflationary. This is again from bitcoinblockhalf.com. Currently, it's annualized an 8.73% inflation rate. And after next 2 weeks from today, it'll be a 4.09% inflation rate. That is a huge economic shock to the Bitcoin infrastructure, the ecosystem, any sort of financial ecosystem. Cutting in half the supply that's coming online is a tremendous shock. And you might say, well, it's a deflationary store of value. All these things are great. It's going to be cut in half. But are there any downsides to this process? possibly, we might run into hash apocalypse. What is the hash apocalypse? I'm sorry for that. That's terrible. I tried to do a little bit of MS Paint on it, but it's awful. But anyway, the hash apocalypse is a theoretical situation where, let's say that you are a large miner in Iceland or China, and you have all this sunk cost in this huge mine. You got all the chips up and running. Mining's going okay, but now you're cashing in your Bitcoin that you mined, and you're paying 90% of it to the electricity provider that runs you the power to run all these chips and mine all this Bitcoin. And July 10th rolls around, and you go, oh, I'm now making half of what I was yesterday. How am I supposed to pay my electricity bills? And you go down and you start unplugging all your miners. Like, I can't pay for all this electricity I'm using to mine these Bitcoins. So what happens if a bunch of miners do that? They start unplugging their equipment so they don't have to pay the electricity bills. They can't afford it anymore. Hash rate goes down, block times start to increase, transactions take longer to confirm. Bitcoin Reddit blows up with people complaining that their transactions aren't going through. Mainstream media gets hold of Reddit, publishes, oh my God, Bitcoin is dead, again, for the 110th time, but this time it's for real. It's really died this time, right? For real, guys. Everybody says, you know, all the people who aren't hodlers like all of us, right? Say, I better dump my Bitcoin. Dump Bitcoin on the market, the price goes down. Other miners say, well, now I can't even afford to run this, pull in all this electricity. So I'm going to start unplugging my miners. So we get into this basically circle of doom, going downwards and downwards. Now, is this possible, where Bitcoin loses its entire value based on the halving? It's possible. Is it likely this time around? Probably not. Probably not. First of all, miners aren't dumb. They know all the economics of this infrastructure, of this whole ecosystem. They know, everybody's known since the Genesis block that this is happening. You contract around this and you plan around these things, right? I think Andreas has mentioned in a couple of his talks that a lot of the miners, especially in China, have contracts for electricity. So they're not going to go around, at 352 when, block 420,000 rolls around and start unplugging all their miners. The miners are going to run until, their contracts run out, if they need to even unplug them at that time. The other thing to keep in mind is, interestingly enough, the price has really gone on a tear the last couple of weeks. Anybody notice that? I don't know. It's kind of interesting. Theories that it's a little bit of speculation about the halvening, right? Econ 101, less supply coming online, higher price, people buying into it already. But then people 3 months ago were saying it was already priced in. So who knows? I can see a shaking head there. No, not quite yet. We'll see what happens, but it looks like the price is at least doubled from where it was several months ago. So if your supply gets cut in half, you're still making the same amount of money. Keep them running. Keep paying the bills. Everything moves forward. So I'm not sure that we have to worry about the hash apocalypse. So what should we do instead? We should keep calm and party like it's block 419,999. So that's my recommendation. We'll talk a little bit more about the party we're going to be having. I believe it'll be a feast. We'll confirm that. And I think it's an amazing event. I have a chicken scratch design that my wife, who's an art director, made into this wonderful design that we've got some t-shirts for. I have t-shirts. If anybody would like one to celebrate this monumentous event, if you send $20 to the Bob Meetup Bitcoin address and show me the transaction, you get a shirt, or you can give me some dirty fiat too. I will make sure that that gets to them. All proceeds are going to go to the Bob Meetup to support these meetings. Thank you very much. Before Pamela comes back, any questions? Comments? Who's excited about the halvening now? Yeah. Are you more excited than you were before my talk?
Yeah. How long do you think before we'll start seeing a coin shortage?
Coin shortage?
Yeah.
I have no idea. I saw one chart that said it would take like several months to actually show up in the markets.
So by November?
I don't know. This might be all speculation we're seeing now because it's all, predictive, but I don't know what the miners do if they hoard coins or if they immediately cash them out, which would.
I think for most of the time they hedge themselves already.
Yeah.
I mean, like you could sell a coin for $1,000 last week,
right?
In a futures contract. I think that's. Anyway, yeah, I think it's going to be a big deal. We're going to have the shortage.
It'll be interesting to see because a lot of people saying, well, it's just a small. The halvening is actually a small amount of the total coins that are traded every day, but I think it's going to be a little bit bigger than that. And we go back to the first, up until this point, right now for the next 2 weeks is 3,600 new coins a day are brought on market. Actually, a little more than that since the blocks are faster than 10 minutes. They're about 9 minutes over the past halving interval instead of 10 minutes. So a little more than 3,600 coins, and then it's going to go to a little more than 1,800 in 2 weeks. We'll see what happens. But yes, go ahead.
So you said it was 64 halvening events in the life of blockchain, and that's to make 15 million. Is that the end number?
It's actually, 15 million is what's out there now, like 15.5,
okay.
15.6 million is out there now. The end total, the asymptotic total that we're approaching is 21 million coins.
21 million, okay.
Right. But again, and that's supposed to be in the end of 2140 is when the last Satoshis are mined for that 21 million. So that's way out. We're going to get most of the way there in the next decade or two, right? And if there were no halving intervals, what's also interesting is that we would already be at 21 million in 2 weeks if we did not have a halving interval. 420,000 times 50 is 21 million. So we would already be at that 21 million point. If we did not have halvings, in 2140 when the last Satoshis are mined, there would be 336 million Bitcoin instead of 21 million. So it's the power of a deflationary currency.
I think 99% of all the coins will be mined by 2040.
Yeah, in our lifetimes.
Yeah.
In our lifetimes. So the rest is just academic. Yeah. Yes.
What happens after 2040?
2140?
Yeah.
Probably be much shorter, maybe like 2130. But fees are supposedly going to support the network. The price of individual Bitcoins will be so high that the fees will be able to, the miners will make enough money from fees to secure the network. I don't think we need to worry about that now, though. That's beyond any of our lifetimes, unless they come out with some crazy trance. Your frozen head will see the last Satoshi. Any other questions?
I was talking to a miner, and he said very assuredly that if the price around the time of the halving is about 700 per Bitcoin, that miners are going to very comfortably break even at that point.
They won't be
So
unplugging their equipment.
no,
Pray for 700.
that's what he said.
Yes.
Hey, very nice presentation.
Thank you.
Thanks so much. Do you think that as the amounts of Bitcoins that are released per block decline, that the hardware manufacturers that are making these A6 chips will be de-incentivized to continue to develop better technology for mining?
It depends on what the price of Bitcoin is, because if you have 3,600, soon to be 1,800 coins released per day, multiply that by how much they're worth each to cash out on the market. That is a little more than the amount of money that people are going to invest to mine those coins, right? So if the price of Bitcoin is high enough, then people will invest the money to get that, and whether that results in better chipsets, not sure. Actually, on a related note, and Andreas has talked about this too, is the fact that mining may start to become more decentralized now that we've achieved that 14 nanometer process and we're running into Moore's Law, where we can't, the efficiencies are no longer in having these huge data centers. The efficiencies are equal out now to the rest of the computing industry. And so a decentralization where electricity is the most expensive part of mining instead of the actual chips, so that we may actually have this crazy idea of Bitcoin miners in our phones in 15, 20 years. it may be that decentralized. We'll see. We'll see, but it's interesting to watch. But yeah, to answer, you go back to your question, it depends on the price of Bitcoin. And you'll see if there's less investment because you'll see the hash power decrease, you'll see the difficulty go back down, right? The length of block times will start to increase. So it'll be pretty obvious that there's no more investment going into making chips faster. All right, thank you very much.
Thank you.